What's up, my stock market bulls and bitches? This is Willie Chambo, aka the Atheist Killer, aka Stocktradamus, back at you with another video. Like I always tell you guys, I'm not a financial advisor. This is for entertainment purposes only. I don't do technical breakdowns. I still don't deep dive like Greg Louganis in a fucking Speedo. And unlike your favorite YouTuber, I don't even do my own goddamn due diligence. But one thing I do know how to do is pick those winners. And in return, all I ask is that after you get rich picking the stocks that I tell you to pick, you come back and show your boy a little bit of love by hitting that Cash App link right down there in the description box. Also, before we begin, I want to remind you guys I'm primarily a long-term growth investor. I don't do any day trading. I don't fuck around with options. I don't know what they mean or how they work. And even if I did, I wouldn't fuck with them, man. We don't have time to stare at a goddamn computer screen all day long when there are beautiful women and beaches to be explored. I always tell you guys, get into your stocks like you get into your side chicks, baby, long and strong. So without any further ado, let's get into today's video.
Ray Ocean, no, you did that.
Hello?
So what we're gonna do today is we're gonna talk about general keys for investing and achieving success in the stock market. Most of these are for people who are just getting started or who are new to investing, but these 7 general rules even apply to me. They even apply to your boy Chambo, and I like to fucking personally live by them. Remember, don't be a goddamn ip. Of course, there are always going to be exceptions to every rule, like buying more NEO at 53, even though it's over our $50 limit. Don't be a fucking asshole and point the shit out, okay? But these are basically 7 fundamental keys and rules that should get you off on the right foot to making a shit ton of money, man. And who don't want to make a shit ton of money? All right, so let's just jump right into this and let me teach you guys how to make a fucking bag or thousands of bags in the fucking stock market. So number 1, if you make under $100,000 a year, I don't want you guys buying any stocks that cost over $50 per share. The risk reward factor is not in your favor, and I want to give you guys the best chance to make a shit ton of money. For example, does it make more sense to buy 1 share of Tesla at $900 or 20 shares of NEO at, let's say, $60 per share? Well, let's look at it. Imagine everything kept going great for Tesla and it runs all the way back up over $2,000 a share. Essentially, you made $1,100. But now, let's say NEO does great and runs all the way up to $500 per share. Your 20 shares will now be worth $10,000. So you got to ask yourself, which do you like better, $1,100 or $10,000? Okay? It's pretty fucking basic. It's not rocket science, man. And I always tell people, the more shares you can own, the better you will be. And here I like to use the fisherman analogy. One fisherman is a seasoned vet and widely known to be an expert at catching fish. He's been out on the water for years and he catches fish every goddamn time. The problem is his boat is already 90% filled with fish. So there may not be as much room to grow, dude. Then next to him, we see a new fisherman, an up-and-coming young phenom star who has a lot of potential and who has shown flashes of brilliance. He knows how to catch fish and is starting to break records. He just hasn't been out on the water that long. But because of this, his boat is only 10% filled with fish. These are the boats, and these are the fishermen that we want to get involved with. These are the guys that we want to get in the boat with, okay? The reason is they got a lot more room to grow. Now, this brings us to point number 2. Number 2 is, don't be an emotional trader. In other words, don't be a goddamn ip. And if you don't know what an ip is just simply an idiot and a pussy, man. And as long-term growth investors go, we can't worry about short-term volatility. We have to be long and strong, baby. You have to have a strong mind and an even stronger stomach for this type of game, because we're going to be seeing days when we look down at our portfolio and say, holy shit, what happened to me goddamn money? But you have to be willing to ride these waves, man. You got to be willing to ride them out like you're riding a fat chick. Because trust me, man, you got to trust the process is going to end up in your favor. Just trust your boy Willie Chambo. At the end of the day, there are going to be a lot more green days than there are red days. So if you're scared, hey, just go to fucking church. But if you want to make money, I don't want to see any emotional trading, and I don't want to see any crybaby fucking ips. This brings us to point number 3. Point number 3 is this. You must always average cost down. What do I always tell you guys? I tell you, bulls buy the dips and the bitches jump ships. This means red days are our shopping days, fellas. All they do is signal a buying opportunity and potential to get into a stock at an even more lucrative entry point. Because of this, we always average cost down. For example, let's say we buy a stock at $45 a share, and then it suddenly drops to $35. Should we sell and cut our losses? Fuck no. You only lose when you sell. Let me repeat that for you ips in the back. You only fucking lose when you sell. So what do? We average cost down because we believe in the companies that we invest in, and we already made that commitment before we opened a position in them. It's basic, dude. This is not rocket science. And also, don't try to be a fucking hero and try to time the market by doing any day trading. Look, if your stock dips, all I want you guys to do is just buy more. If it doesn't dip, great, just keep riding it out. But don't sell off in hopes to see a dip with plans to buy back in later, and then it never dips, because then what happened? Then all you did was fuck yourself. And we don't like fucking ourselves, man. Let's keep it rolling. Now this brings us to point number 4. Point number 4 is, I want you to always set a price target prior to buying into any company. And make sure that you err on the side of being conservative. Don't be an asshole. Don't set some crazy, unrealistic price, okay? Now, once the company reaches this price target that you set, that becomes your stop loss price point. For example, if you set a price target on a company of $200 and let's say it goes to $240, you just keep riding it. And if it drops to $220 or $210, well, you just keep riding it. But the moment that it dips under your $200 price target, say it dips to $199, that is when you sell and when you get out. See you later, alligator. We're fucking gone. Now, this is how you always protect yourself and ensure profits without the fear of losing any of your massive gains. And we're all about those massive gains, right? So look, guys, I want you to keep your price targets fluid. Let them evolve. So hypothetically, let's say you started the price target at $200 on a company, but that stock ran all the way up to $450. Don't keep that same $200 price target. You need to increase it based upon what you feel comfortable with and what your own risk tolerance is. Me, personally, I might raise my price target at this point to $400, which becomes my new stop loss. Another thing I want you guys to do is always set a buy under price or a BUP. Excuse me, the Rona. This will be your blueprint and your instruction manual on when to keep buying and when to sit back and just let it ride. For example, I set my BUP on NEO to $60. So anything under $60, I'm going to pick up more shares. But as soon as it goes over that, I'm done adding to my position. I'll just sit back and just watch my gains grow, man. You can't keep adding to a position over and over again for fucking ever, because you don't want to end up being too heavy in a company when there are so many new potential plays that are coming each and every day. Okay, so this brings us to point number 5. And you hear this one all over the internet, but always be what? Always be well diversified. Never put all your eggs in one goddamn basket. What this means is I don't want to see you guys ever put all your money into one stock or into one sector. You have to spread it all around. You got to spread all your love around, man, to all your side chicks. You can't just give it to one, because all the rest of them going to be mad. But also, I never want you guys to have more than 20, pay attention, never have more than 20 total companies in your portfolio at one given time. Some investors disagree with this and even suggest having up to 40 companies in your portfolio at one time. Stock mo. But I wholeheartedly disagree with that. No one can focus on 40 different companies and stay up to date with each and every one of them all the time. It's just too fucking much. And it takes away from the fun, because you lose that personal intimate connection with the companies that you do buy. And me, Chambo, I like to love the companies that I buy. I like to have a personal, intimate relationship with the companies I buy. So the ideal amount that I want you guys to have is somewhere between 15 and 20 companies at any given time in your fucking portfolio. So this brings us to point number 6. Point number 6 is, I only want you guys to buy stocks that you believe in long term. Yes, I do want you to have a couple short and midterm plays in your portfolio, but for the most part, I want you to be all about them long-term growth plays. And if you don't believe in a company long-term, well, just don't invest in them. Also, never buy a stock purely off of one technical aspect. You have to remember, stocks don't move simply because of one or two variables. And for some reason, a lot of YouTubers have forgotten this when they're making their price predictions. What do I mean exactly? Well, for example, it would be ignorant to say stocks only trade off of technical analysis, market cap, volume, and numbers and shit. They don't. They also trade off of a wide variety of fundamentals, which include but are not limited to hype, sector, future assumed potential, etc. To formulate a truly accurate price target, you have to incorporate all these things into your equation. You have to look at it like a giant pot of fucking gumbo, dude. Otherwise, your assumed conclusion is going to be flawed every fucking time. And this is what sets your boy Chambo apart. This is what makes me special and why you're here on my fucking channel. This is what sets me apart from all the other goddamn YouTubers. I'm good at picking the winners because I have a good feel for the entire landscape, not just one or two technical aspects of a fucking company. All right, so that brings us to point number 7. And point number 7 is this. Your short and medium term plays are important because they generate you usable income. And I want you to monitor these daily and weekly. The money that you make from these, you're going to be able to use this money in your everyday life to put in the bank, to invest back into the stock market, or do whatever that you want to do with it. Because as a long-term growth investor, a lot of your money becomes what we call dead money, because you've committed to not touching it and leaving it in the market for a long period of time. So if you want to have money to fuck with and to play with and to live with, well, I need you guys to not skip over this step. I need you guys to make sure that you have good short and medium term plays in your portfolio all the time, but don't have a lot of them. Just have a few. All right, now, I told you guys this was 7 keys to investing, but because I love you guys and because I'm Willie Chambo, Stockstradamus, I decided that I'm going to give you 2 more, and I'm going to give you 2 bonus ones right now. Bonus number 1, I want you guys to always have money ready waiting for you on the sideline. For example, if a stock that you just bought at $25 immediately drops down to $19, I want you to have money on hand ready to buy more. I don't want all your money tied up, or for you to have to wait for your money in the bank to deposit or clear. Have it ready for you, sitting on the sideline, just ready to go, man, so you can make moves as soon as opportunities become available and present themselves. If you want to be able to make moves, you have to give yourself the potential to be able to make those moves. So, bonus number 1, man. Let me fix my camera. Bonus number 1, always have money on the sideline. Bonus number 2, people keep asking me this question, and they keep asking me, what are the hot sectors to buy into right now? And I'm going to tell you the 2 hot sectors are, number 1, the EV market, okay? Of course, we all know about Tesla, NIO, Li Auto, Xpeng, all the shit, but also MP Materials, SBE, and anything associated with the EV sector, okay? Also, I want to tell you guys the other big one that I believe in right now is the travel sector. American Airlines, SAVE, Carnival, Norwegian, etc. They've all been beaten down because of the Rona. But if they go back to their pre-COVID prices, it's going to be fucking money. So get into them right now because they're all sitting like at $20-some, but they're going to go back up to like 70 or 80. So these 2 sectors, I believe, are the biggest sectors to get into right now. And also because the Rona is going away and the vaccine is here. So why wouldn't you think that the travel shit is going to go back up? Of course it is, man. Of course it fucking is. Now, what I want you guys to do, I'm going to leave you with this. What I want you guys to do if you're just starting out as an investor, I want you to pick 3 stocks. This is just another bonus because I love you guys. I want you to pick 3 of your favorite stocks. And I want you to play with them. And I want you to learn how the market works. I want you to put 50% of your total investment on your home run hitter. Out of the 3, which one is your home run hitter? And I don't care if it's $50, $500, or $1,000, whatever it is, put 50% of your money on your number 1 stock that you feel has the strongest potential to win. Next, I want you to put 30% on your second place stock, the one that you feel has the second best potential to win. And lastly, I want you to put 20% of your money on your third stock. This is going to set you up to win, and it's going to get you going in the right direction. It's going to set you up and teach you how the market works. It's going to allow you to watch it play out. You're going to be able to learn it and decide what you want to do next and how you're going to grow as an investor and start to understand the goddamn market. So look, man, these are my 7 keys plus a bunch of fucking bonus because I love you guys. Don't forget to like, comment, share, subscribe, smash the bell notification, all the goddamn shit. And if you love me, when you get rich for picking the stocks that I tell you to pick, just come back, show me a little bit of love, hit the Cash App link down there in the description box. And until next time, man, I am fucking Stockstradamus, the Atheist Killer. I love you guys. I'm out of here, bro. Peace.